Hey everybody, it's me, Gregory Mannarino. How are you today? It is Monday, April 25th, 2016. People, I want to talk about a lot of things, but the main issue right now, to me, seems very straightforward, and I want to get a little bit into this. Right now, today, at this moment, we're existing or coexisting with a financial Frankenstein. And the reason why it is so important to understand right now, today, is pretty simple. It's the Federal Reserve. This week, we're going to hear from the Federal Reserve about monetary policy. It is already a foregone conclusion, pretty much, that the Federal Reserve is going to do nothing with regard to monetary policy this month. There's speculation that they may do something in June. We'll see how that plays out. But understand, when the Federal Reserve decided to take over the market, literally, that's what they did. The 2008 crash event, again, created this environment where the Federal Reserve needed to step in, or they felt that they needed to step in and stop the bleeding in the market. The Dow Jones Industrial Average had fallen to about 6,000. Then they went in there. They said, hey, you know what? We're going to start printing cash out of thin air. We're going to start buying assets, suppressing interest rates. Again, what did that do? That inflated a debt bubble of epic proportions and reinflated a stock market bubble. And how did they do that? Again, by fostering an environment of risk. So the Federal Reserve decided at that point to take over the largest part of this market, which is the debt market, suppress interest rates artificially, not allowing the free market to determine fair value for debt. And that has created distortions to an extreme in every single asset class. I've spoken about this many times, but here's the main problem where we are today. So the Federal Reserve, again, the world is watching the Federal Reserve right now. They have a credibility issue here, and this entire system is built upon one premise, and that is confidence that it will work. When it becomes realized that the world central banks have no alternative but to continue to artificially suppress interest rates, inflate the stock market bubble, which cannot possibly justify the multiples that it's trading on right now, all of this has to correct to fair value. So in my last video, I spoke about the collapse, right? The collapse is simply the free market doing its sole job. That is to determine fair value. Everything is distorted. Everything is twisted. So when this all corrects to a fair value, it's going to feel like a collapse, but it's really not going to be a collapse. It's going to be simply the market correcting itself. So that is the dilemma that we're in here. If the Federal Reserve does not continue to maintain their manipulation, because that's exactly what this is. You listen to the mainstream, and they talk about these markets as if everything is okay. How can the market be okay if world central banks have literally taken over the largest part of the market, the debt market, and is artificially suppressing interest rates? Understand? This is manipulation beyond any shadow of any doubt. So if the largest part of the market is being manipulated, what does that mean for every single other asset? Just think about it. It should be absolutely evident to you. So this will correct to fair value. We know this for a fact. The Federal Reserve is really in a lot of trouble right now. All they've done is continue to move goalposts, make up reasons why they can't raise interest rates. They know they can't do this. There's never been an exit plan. Never. You understand? We're in uncharted territory here. The Federal Reserve, when they decided to embark on QE1, like I spoke about earlier in this video, when the Dow hit 6,000, they just were in panic mode to stop the bleeding in the market. Okay. But they continued and continued with QE2, Operation Twist, and all kinds of other things that are going on right now, as a matter of fact. And I've covered this. The Federal Reserve has never stopped printing cash out of thin air and buying bonds with it. How do we know that? It's just so simple, and it's right in front of our faces. The Federal Reserve, once again, does not have magical powers. They cannot just say, hey, you know what? We're going to keep interest rates low. They have to get into the market and make it happen. They have to get into the market and buy debt. Understand? The Federal Reserve is also doing a lot of other backdoor things. They're forcing the big banks to buy debt as well, exposing the shareholders, which are the depositors, to share risk. You got it? The environment we're in clearly is unlike anything we have ever seen before. And beyond any doubt, if you have an understanding of any of this at all, you can understand why I say we are existing and have been existing in this alternative universe, number one. And number two, the financial monster is here now. It's right among us at this moment. And depending on what the Federal Reserve does over the next several months, weeks, the market is going to react here. Just last week, I had said I was buying puts against the S&P 500. Ticker SPY, August 210 puts. Market is down since that time. It's down today. I don't think it's over here. We're getting abysmal earnings reports today as I'm doing this video blog. Earlier, the Dow was down 130 points. I'm not sure what it's down right now. So there's a lot of things in play here. But what we can be rest assured of is this market is going to attain fair value at one point. And this collapse is simply the market doing its sole job, and that is to determine fair market value. Today, we also got bad economic news. Housing unexpectedly fell. Single family homes unexpectedly fell. And again, this is playing into the fact that there is no economic recovery here in the United States whatsoever. And all you need to do is look at two metrics, people. Two, I don't care what you're going to hear come out of the mouths of the politicians, President Obama. What they will not tell you is we have a money velocity at a 4-decade low, something I've been talking about lately, which seems to be picking up, but for the wrong reasons. And we have this labor force participation rate also at a 4-decade low. Cannot have an economic recovery without those two metrics moving higher. Cannot happen. Period. I don't know another way to say that. Gold and silver. Look at the performance of gold and silver since the beginning of this year. In an interview I did with Greg Hunter at the end of last year, December, I said this year, dollar down, precious metals higher, and it's just been epic what we have seen with regard to these assets. A trend that will continue here, people. So you can see the market right now trying to do its job. Also, another important thing that happened today, the U.S. 10-year yield hit 1.9. Again, watch that bond market. I can't tell you how important that is. The debt market, which is being manipulated by world central banks, the biggest part of this market, everything prices off of that. So watch the bond market yields. The higher the yields go, the less risk people want to take with regard to the stock market. It's that simple. Okay, just to put a very easy perspective on this. So again, this environment of risk that we've had for quite a long time here at one time, and this may be happening now, is going to turn to an environment of risk off. So we're risk on now to risk off. And we turn to risk off, we're going to see bond yields spike. This is going to put pressure on the stock market, which is going to fall. We're going to see commodities rise exponentially. Why? Because again, they've been suppressed through many mechanisms here. And the distortions in this market will correct, and that's part of it. So this is the financial monster that we are now existing among right here. It's with us now. And we're going to see how this plays out. And if this thing does what it, well, when it does what it has to do, that is to determine fair market value, everyone is going to understand the ferocity of this financial monster that is going to just simply rip through people's investment funds. But those of us that are in the right spots here, and this goes back to my premise of becoming your own central bank and betting against this debt, we're going to come out of here a lot better off, I think, than we can even imagine at this particular time. And we're going to see how that plays out, people. Again, we are existing in very, very dangerous times here. Um, but that does not mean we cannot capitalize on this by taking advantage of market dynamics, betting against the market right now. Again, we're coming into seasonality as well. I know this is a little long, but I think I'm covering a lot of important things here. End of April, market tends to weaken. You get that the Wall Street adage, sell in May and go away. That may play out here. We're going to hear from a lot of big companies reporting earnings over the next couple of days, and the Federal Reserve this week. So I think, at least at this point, people, that the game here means we need to be short this market, short equities, continuing to acquire precious metals, the hard asset, betting against this debt, becoming your own central bank, super important. And we're going to take advantage of this just like the big investment banks are going to do. There's no reason why we can't play the same game that they play. And that's what I'm intent on doing for myself and all of you as well. All right, I'm going to end this video getting awfully long. Just real quick, if you're watching this video anywhere else except my website, traderschoice.net, is at least 24 hours old. That's not a good thing. For those that are watching on my website, you're getting this information before anyone else, and that gives you an edge. And life is built on gaining small edges and taking advantage of them. So keep that in mind. If you're not watching my videos on my website, traderschoice.net, you're a little bit behind the curve. So real simple. Start watching these videos on my website, and we will all be better off. I'll see you soon. Over now.